Mortgage rates are suddenly at their lowest level in nearly a year. Almost exactly a year ago, the 30-year fixed mortgage rate briefly dipped to 6.1%, and there was a notable increase in homebuyer demand for several subsequent months, September, October, and into November 2024. At the time, we measured this demand increase in weekly pending sales volumes, also in surprising price resilience, and we also tracked fewer price reductions. In Q4 2024, there was also a notable mini surge in refinancings. Mortgage rates today are about 6.3%, the lowest they've been all year. Is it enough to move the needle on a very weak homebuyer demand year? Mortgage payments are a couple $100 a month cheaper now than in May or June. Is it enough? I like to point out that consumers are more sensitive to changes in rates than to the absolute levels, and we've had very little change in mortgage rates in 3 years. There have been just a few moments where rates jumped into the upper sevens or down close to 6%. Mostly in the last 3 years, the 30-year fixed mortgage rate has stayed between 6.5% and 7.25%. In the last few days, we saw 6.29%. For consumers, we see some change in rates, and that change this week at least has been favorable. So in the next few weeks, if we're lucky, and mortgage rates continue to move lower, maybe 10 or 20 basis points lower, we'll be able to track in the weekly data how much, if any, home buyers are newly motivated. It is important to note that we are not out of the woods yet for mortgage rates. There are plenty of forces that could push bond market yields higher and therefore mortgage rates higher again. For example, there are plenty of inflation pressures in the economy. Also, the government is spending and borrowing huge amounts of money. Or if the market perceives the Fed is losing independence, that could drive yields higher. Even as the president is talking about lower interest rates, many of the administration's policies could push rates higher. And remember, these risks of higher mortgage rates are true even if the Fed cuts short-term interest rates when they meet next week. Mortgage markets could move more expensive. We have a nice moment right now with the lowest mortgage rates in nearly a year, and we'll have to see if it holds, and we'll measure how many potential home buyers take advantage of the moment. Is it enough for them? That's why we track the data every week. I'm Mike Simonsen. I'm the Chief Economist at Compass. In these videos, I look at the U.S. housing market data every week. Our goal is to help everyone understand what's actually happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research as well as insights from what we see here at Compass, the largest real estate brokerage in the country by sales volume. By the way, if you like these videos and our weekly housing market data, please add yourself to our new Compass Intelligence mailing list. There's a link in the description below to join us. Click that link, add your name to the list. We send the Compass Intelligence email every Monday with the data and the slides and the video. This is a new list we're building from scratch at Compass, but we've already have thousands of people who've joined, so you should join us too. Click that link below. All right, let's dive into the data here for the beginning of September 2025. Let's start today with the supply data. The available inventory of unsold homes on the market dipped again this week to 847,000. That's 1.7% fewer homes for sale than a week ago. This week's report data includes the Labor Day holiday, so there's often a dip in inventory over the long weekends. The holiday is also an opportunity for sellers to withdraw a listing if it hasn't seen any attention. The bottom line is that there are fewer homes unsold and the curve is trending lower. So far this year, inventory peaked in early August. So this week was a continuation of the recent trends. In fact, the decline in the number of homes on the market this week was bigger than we expected. This is yet another data point confirming what we've been sharing for a couple of months now. Inventory is no longer growing. This fact is different from the conventional wisdom out there. If you haven't been paying attention closely to the data, you probably assume that the market is slow and therefore inventory of unsold homes just keeps piling up. But that's not true. This is most obvious in the big Sunbelt markets. Florida, for instance, inventory fell by another 1.5% this week. There are fewer than 100,000 single-family homes unsold on the market in Florida for the first time since February. Last year in Florida, inventory rose pretty much every single week all year. Florida's inventory decline is from a slight uptick in the weekly pending sales rate and because because frustrated potential sellers are walking away. So either way, the inventory of unsold homes is limited. So in this chart, we have the national inventory trends. Each line is a year. The blue line is 2025. The purple line is from last year. There are now 20% more homes on the market than a year ago. It is notable that last year at this time, inventory was still climbing pretty quickly each week, and now inventory is declining. So notice that the inventory continued to grow in the purple line last year until October. Despite the fact that that supply has been shrinking recently, I do expect a few more weeks where inventory builds a bit for the end of the summer here. It would be a big surprise if supply doesn't rebound at least a bit this month. The takeaway for inventory now is that the unsold supply of homes on the market is not growing when last year supply was building quickly. We are experiencing now the price pressures from last year's inventory gains. The limits of supply now have implications for future pricing. There were 65,000 newly listed single-family homes on the market this week, so plus another 11,000 immediate sales. So that's overall 2% more sellers in the week than the same week a year ago, 2% more. Earlier in the year, most weeks had 5 to 10% more sellers than the year prior. So now it's just 2%. Still, I interpret that slightly more sellers is a good thing. A healthy market is one that has buyers and sellers growing but not getting out of balance with each other one way or the other. We've been in 3 years of low demand and low supply, and we're seeing slight growth in both of those numbers. It's not massive, but I like to think of it as an improving signal. In this chart, each line is a year. The gray lines are all the years pre-pandemic. It's easy to see the seasonal curve. New listings peak in June, and then there are fewer sellers each week into the fall. The blue line for 2025 is still at the low end of the normal range with fewer sellers than normal. But at least we have a few more sellers now than last year or in 2023. As always, I watch the new listings data for any sign that sellers are accelerating into this market. If the blue line were to grow substantially later in the year, maybe because job losses mean people need to unload their home, or because investors are finding deals no longer yield what they want. If those sellers accelerate into a weak demand market, that's the scenario that would lead to significant price declines. So we watch the new listings data every week, and this year we see more sellers, but not a lot of sellers. The key is that we don't see acceleration of those sellers, which implies that the market keeps a cap on supply and has implications for pricing. If you're sitting on the sidelines waiting for a crash and suddenly to bring magically cheap deals, there's no sign of that happening at the national level. Local deals are available for sure, but there's no big national crash trend in the data. The median price of the newly pending home sales this week was $397,000. That's down a smidge from last week. It came in a few percent above the same week a year ago. This chart illustrates an important moment last year. In the purple line, prices were declining pretty quickly into September 2024. Last year, right at this moment, in mid-September though, that's when mortgage rates dipped to 6.1%, which was the lowest level in a couple of years. So that purple line in home prices is one of the places where you can see how much demand that rate move initiated at the time. Home prices had a surprising boost at the late in the year last year. This pending sales price is one place where we'll now see if recent mortgage rates moves are enough to move the needle on homebuyer demand. It was very clear last year that 6.1% was sufficient, but rates are not that low yet. And I suspect that demand has been weak enough and supply great enough that unless rates keep inching down, closer to say to 6%, that we will probably continue the recent downward pressure on prices, unless we get lucky and rates continue to move lower with some persistence. We're going to keep watching this weekly price pending data to see if and when buyers respond. Let's move on to the sales data. We counted 65,000 single-family home sales started this week, plus another 13,000 condos newly into contract. That count is about 1% fewer than a week ago with the holiday, but it is 7% more than the same week last year. In fact, we counted more home sales started this week than in the first week of September in any of the last 3 years. These are little green shoots for optimism in sales growth. The blue line is just above the purple line. So I'm so conditioned to thinking that home sales are down and not climbing out of the basement. It's been so long in this trough, but it kind of looks like a few more transactions are happening. So I ask myself, why would there be any growth in home sales? What conditions are helping the market? I can think of a couple reasons. First, the supply of homes on the market is sufficient that if you want to buy a house, you can go find your house. Selection is better for buyers, and maybe that's freeing for some buyers who've waited several years to act. That also means that in some places, bargains are being found. There are more motivated sellers than there have been in many years. So the more years we spend with higher mortgage rates, the more people who are not locked into those ultra-low mortgage payments. There are sellers now who bought 3 years ago. They're less likely to want to hold on to that house forever. So all of these variables imply that gradually sales volumes return to more normal levels. As a result, we see slightly improved pending sales rates over 2024. This was a good week for sales growth. We're showing 7% more newly pending home sales than in the same week of 2024. Home sales picked up in September and October 24 after that rate dip last year. So again, the question we're tracking in the data is whether these recent moves in lower mortgage rates are enough to move the needle now. Stay tuned for that data. Finally, today we're going to look into the future of pricing trends. And the leading indicator signals are actually maybe improving a bit. Price reductions ticked down this week by 60 basis points. 41.5% of the homes on the market have taken a price cut from the original list price. That's down from 42.1% a week ago, but it's still more than the 40% last year. So fewer price cuts in the active market now implies that buyers and sellers are getting closer on their expectations. Some of this improvement is late seasonality. There are fewer homes on the market now, and likely a handful of the homes that had previously taken price cuts either found their offers or they withdrew from the market. We know that slightly more sales are happening and there are slightly more withdrawals. What this means is that the inventory that remains is slightly more fresh and less in need of a price cut. So if you're selling now, there are some signals that maybe your timing is lucky, but it's also obvious that there's no room to overprice a listing. Nearly 42% of the homes on the market have taken a price cut. So even though that number is improving, it's still a lot of sellers who had to cut their price. It seems wise to respect that in the market now. Price your house wisely. If we get lucky, mortgage rates have further to fall. If the market behaves like last year, we could see the sales tick up and price resilience with buyer demand. But this is not guaranteed. This is a fragile market, and the wrong news could reverse this tiny little optimism we see in the data. Okay, that's all the data we have time for today. If you want to make sure you don't miss any of the weekly data and video commentary, you should sign up for our email list. We've been building this list from scratch at Compass, so even if you've been following me for a long time, please opt into this list so we can stay connected. There's a link in the description below to add your name to the list. I also have this QR code here so that you can go directly to that form and sign up for Compass Intelligence. All right, thanks everybody. More next week.